So these trading rules will most likely change the way you trade forever. Now, the other day I was rereading one of the Stock Market Wizards book and I came across a chapter that I had completely forgot about. Now, this chapter was an interview with Dr. Van K. Tharp. Now, one of the notable things he mentioned is that all the traders that he evaluated, the top successful traders, looked at trading as a game.
It doesn't make sense.
Now, as I was reading this, I was getting a little bit confused. However, as I looked a little bit deeper into it, I realized what he was saying. Now, one of the things he mentioned is that, top traders have a set of rules, and what they do is treat those rules as a game where every single day they read all the rules, and then at the end of the trading session, either pat themselves on the back for, following those rules, or they evaluate which rule they broken. Now, when I was first reading this, I thought to myself, whoa, this is kind of ridiculous. I mean, I already know what rules I'm trying to follow, what rules I'm not trying to break. Isn't it kind of redundant to read the rules every single day and treat it like a game? However, Dr. Van K. Tharp mentioned that a lot of trading is psychology, and although the success of it comes from the mechanics, many individuals deviate from the mechanics in the successful strategies simply because of psychology, emotions, which then gave me the idea that maybe I should write down my rules, read them every single day, and try this out. Now, once I started doing this, it made complete sense why this actually works. See, in any other field, if you want to see success, you'll most likely work on trying to prepare for success, right? Because at the end of the day, the more you prepare, the better you'll have of a performance on average. For example, if two individuals go to the court to play basketball, right? The individual who probably took practice shots before the game is gonna understand the mechanics of taking a shot and have a better performance on average. So the whole idea of not only having the mechanics of having good rules, but also reinforcing those rules by preparing before you go into the field makes a big difference. Now, with that being said, I wanted to compile a simple set of trading rules that I could just share with you guys. This way you guys could implement this strategy as well. Rule number one is to follow your rules and read them every single day. Again, this may sound silly. This is the first rule. Yeah, it's redundant to read it every day, but no, it does matter because it does reinforce what you're looking to do for your objective every single day. It's kind of like going through your game plan before you actually head into the field. Rule number two, time of day absolutely matters. So there are certain times of the day where there is much more volume, which provides more liquidity for your trading, right? So that's typically gonna be the first hour of the trading session and also the last hour of the trading session, which is power hour. Now, of course, moves can happen in the overall market at any hour during the market open. However, what I find, and what you're gonna notice, obviously, is that during lunchtime, during 12 p.m. Eastern, right, there is a lack of, liquidity. There is less volume going on. And so if you're trying to catch a big trade, more often than not, you're most likely going to find most of the trading, movement or the price action take place during either the first hour or the last hour of the trading session. Rule number three, cash is the safest position. So oftentimes you're gonna find that you may not know what's going on in the overall market, and that's okay, right? Because at the end of the day, you don't have to trade every single time. Only trade when the opportunity presents itself. So if you're not sure or you don't have any conviction of what may go on, then the best idea is to not just throw your money into the market hoping for the best, but to really just, sit back, observe, and then wait for that opportunity, like I said, to present itself. Rule number four, before you enter into a trade, always know where your stop is. Now, of course, your stop is going to be your own personal stop. For example, when it comes for me, when it comes to trading, I limit a loss of 1% when it comes to shares. However, when it comes to options, I limit up to 10%, but I'm also trading with a fraction of my overall, position, right? When it comes to option, that's a completely different story. I don't trade with like my average position size. In fact, I only use like less than 15% when it comes to option. But I let myself, have a 10% stop limit just because options can be much more volatile. However, when it comes to shares, I limit it at 1%. So you have to know what your limits are before you enter into a trade. Now, again, your limits are going to be completely different from everyone else. Rule number five, you're going to be wrong a lot and you have to get over it. That's the whole reason why you have stop limits. If you're wrong, just limit your loss, because guess what? If you lose 1%, that's fine. You could go back in once you see an opportunity and hopefully get a risk to reward ratio that seems optimal, where maybe you can make 3% back, right? Maybe 4%. Or if you're trading options, of course, the scale is going to be slightly different, but it doesn't matter, if you're wrong. You're going to be wrong a lot. The whole idea is when you're wrong, cut those losses so they don't turn into larger losses. The whole reason why traders get obliterated, and I've blown up maybe twice, 2 different accounts on 2 different occasions, is because I let my losses get larger than what the limit should have been, and that is just a recipe for disaster. Rule number 6, no FOMO. Do not chase, right? There's so many times where, the market either runs up super high or maybe it's running down and you're shorting, right? Whichever direction you're going, it runs up in a crazy direction and you feel like you're missing out and you have to jump into it. However, you can't chase things at all, because at the end of the day, there is opportunity pretty much every single day in the market. And trust me, you're not missing out. Oftentimes you kind of feel like, oh man, I'm missing out if I just don't go in now. And the chances are the higher that's already ran, the closer that it is to probably reversing back, which is why you really only want to strike when the opportunity is really ripe. You don't want to just go in after things already took its run and now you're going to be in the losing trade. You do not want to chase. Trust me, opportunity is there at every single corner and you're not missing out. Rule number 7, if you're scared, don't take the trade. Chances are, if you're scared, it's either because you're really not confident in the position size that you're taking, or you're really not having any conviction of where the price action will go. And if that's the case, then why are you even in this trade? You should just pretty much get out. Rule number 8, never turn a day trade into a swing trade. Anytime you enter into the market, you should absolutely already understand what your objective is. If you know that you want to do a day trade, then you should leave it as a day trade, and it should either be a small loss, a neutral position, or a profit. It should not be anything else. If you turn a day trade into a swing trade, you're absolutely just disregarding risk, because what ends up happening is traders they go in with the intention of making a day trade. The trade doesn't go along with what they planned, and then they think to themselves, well, maybe if I just hold this overnight, hopefully this could really go in my direction. And what you're doing is you're just throwing risk away and exposing yourself to more risk than you really should not have even expose yourself in the first place, which is why you need to have your limits and understand what your objective is when you're participating into a trade. Rule number 9, let your winners run. Now, by all means, it's okay to lock in profits. If you're up on a trade, yeah, you could absolutely lock in profits. But what I find it best to do is, if you're up on a trade, simply put a trailing stop limit. So as the stock is going up, you move your stop limit to trap in the profits. So even if the stock goes down, well, guess what? Then you lock in profits. I don't think it's really the best idea to just sell just because you want to get out. You should always just have your stop limit following the stock as it goes up. And once it starts going down, well, guess what? It'll touch that limit and you'll lock in your profits. And I think that's the best way to lock in profits, because when you let your winners run, you expose yourself to massive opportunity that you just don't have when you just kind of just take money off the table immediately. Again, not, a bad idea to take money off the table, but, sometimes it's just good to, manage your trade by having a stop limit follow that, trade. Rule number 10, have a daily loss limit. So what you should already have in your head for the day is, how much money am I willing to lose for the day? Because of course you have your, your stop limit of 1%, but what if you enter into 3 different trades and they all go down, losing you 1% 3 times in a row? Well, you should decide for yourself, what is your daily loss limit? What is the limit where you're like, okay, I need to stop trading for the day, take a moment to really just get out of the market and evaluate what's going on. You need to absolutely have a, loss limit. Now for me personally, I like to just stop after I have 3 losses in a row for one day. If that happens, well, guess what? This is not my day to continue trading. Even if a great opportunity comes in later on, well, guess what? I am not participating in that because I want to just sit out and think about what did I do wrong earlier in the day in the first place. Rule number 11, size absolutely matters. Now, you may have heard in other areas of your life that size doesn't matter. However, when it comes to trading, size absolutely matters because this is one of the best ways that you can mitigate your risk, because using the proper, position sizing can make the ultimate difference, right? And let's say you're trading with an account size of 100,000. You shouldn't enter into every single trade exposing the entire 100,000. Maybe you want to break it up into smaller sections, maybe break it up into 4 sections. You enter in with 25,000. If the trade is still going in your direction, add another 25,000 and, break up your trade into different position sizes. You shouldn't expose your entire capital all in the first, second of the trade. Now, there's definitely about 10 more rules in my trading rule list. However, just for the sake of making this video concise and not making it extremely long, I wanted to just limit it at just 11 rules, because at the end of the day, these rules are just like a general guideline, something that you could obviously, put into your list of rules, or, just alter it in the way that you want to. At the end of the day, the goal is to have a set of rules and then use those rules as something that you use every single day as a daily reminder to reinforce good habits in your trading behavior, and then reward yourself every single day by either patting yourself on the back saying, well, this was a good day, I followed my trade, or just evaluating where did you break your rules. And remember, even if you followed your rules but you lost money for the day, you should still pat yourself on the back because you mitigated risk and you followed your trading rules. With that being said, guys, also make sure to check out the links for the description of this video, because one of the links is going to be a link to Amazon where I have a list of trading books and other books that I've read, especially the book where I got this information from. So definitely check out that link. And also check out the first link, which is going to be a link to the Push and Profit program. Essentially, you have access to my private trading group where, I have the entire guideline there. Again, you could always adjust your trading rule set however you please, but I do have my entire guideline in the Push and Profit private group, and every single day I do provide a watch list of what stocks I'm looking to trade and the reason why. So definitely check out the links in the description below. And with that being said, guys, hope you're having a beautiful day, and I'll see you guys on this next video right over here. Take care.